Hi everyone, I'm Vince McManus with Commonwealth Financial Services. Today, I want to talk about one of the newest savings and investment opportunities available for children, a Section 530A account, more commonly known as a Trump account. So what exactly is a Trump account? You can think of it as an investment account created specifically for children to give them an early start towards building long-term wealth. Now, unlike a 529 plan, which is primarily designed to help pay for education, a Trump account is structured as a special type of IRA and is intended to provide a broader financial foundation that can potentially continue well into adulthood. So how does it work? A Trump account is established for the benefit of a child who is under age 18 and has a valid Social Security number. Now, during what's called the growth period, the money must generally be invested in certain low-cost mutual funds or ETFs that track an index made up primarily of U.S. companies. It's a pretty straightforward idea. You start early, invest broadly, keep your costs low, and give the money time to potentially compound. Now, importantly, the money stays invested and cannot be withdrawn during this growth period. Now, what about that $1,000 you've probably heard about? Yes, it's true. The government is going to give you $1,000 if you qualify. Under the federal pilot program, the Treasurer will make a one-time contribution for an eligible child that is a U.S. citizen, has a valid Social Security number, and was born between January 1st, 2025 and December 31st, 2028. Now, you have to make the election to establish this this Trump account, to receive the pilot contribution. So for families with a child born during that window, this is definitely something worth knowing about and doing. Who else can contribute? Another feature that I think is interesting is that contributions aren't limited to mom and dad. Parents, grandparents, relatives, friends, and anybody could really contribute to the child's account. Now, during the growth period, the annual limit for contributions is $5,000 per child, and the government's initial $1,000 contribution does not count towards that limit. Employers can even participate. Under current law, an employer can contribute up to $2,500 per year to a Trump account for an employee or an employee's dependent through a qualifying employer program. That contribution can receive favorable tax treatment for the employee, although it does count towards the general $5,000 annual contribution limit. There are also certain contributions from government and charitable organizations that may fall outside that annual limit. Another opportunity that hasn't received nearly as much attention applies to children who were born before January 1st, 2025, and therefore didn't qualify for the government's $1,000 contribution. Michael and Susan Dell have committed billions of dollars to provide a $250 contribution to Trump account for millions of eligible children. Generally, this opportunity is targeted towards eligible children aged 10 and younger, and it is subject to additional requirements, the most known one being the child's zip code that they grow up in. And here's the important detail. The contribution for the Dell is available for the first 25 million eligible accounts that are activated. So if you have a child or grandchild who may qualify, it's certainly worth checking. There's a checker available through Invest America at investamerica.org/Dell. So how is this different from a 529 plan? That's probably the question that I get asked the most. Again, a 529 plan is specifically designed around education. It offers tax-free growth and tax-free withdrawals for qualified educational expenses. A Trump account is structured as a special type of an IRA. During childhood, the money is locked in and invests for long-term growth. And once the account's special childhood growth period ends, traditional IRA rules generally apply. Now, that distinction is important because it means a Trump account shouldn't simply be viewed as a replacement for a 529. In fact, for many families, I think the accounts will be complementary. 529 can remain the education-focused bucket. A Trump account can provide another long-term investment bucket for the child or the grandchild. Which one or which combination makes sense will depend on your family's goals, tax situation, and overall financial plan. Now, here's where I think some of the planning gets really interesting. There could be some compelling long-term opportunities involving these accounts as children become adults to do a little bit of tax arbitrage. For example, depending on the child's circumstances at the time, there could be a chance to do some Roth conversions to use some of these assets at the beginning of the child's long-term retirement nest egg that we place in what we call the zero tax bucket. Now, it's far too nuanced to cover responsibly in a short Wealth Wednesday video, and the rules and the child's individual circumstance would matter significantly, but it's something we'll be watching as these accounts mature. So what's the takeaway? For me, the most interesting part of the program is not necessarily the government's $1,000, and it isn't even necessarily the additional $250 that some children may receive. It's quite simply time. Starting an investment account when a child is young gives those dollars years and potentially decades to compound. And if some of those assets ultimately remain invested well into adulthood, that time horizon becomes even more powerful. But like most financial planning opportunities, the real question isn't simply, can I open one? It's, how does this fit into the rest of my family's financial plan? So, should you contribute to a Trump account, a 529 plan, or both? How much should you contribute? And how might this fit along your other goals for your children or your grandchildren? Those are planning decisions, and the right answer is going to look different for every single family. Now, if you have children or grandchildren who may qualify, or you simply want to understand whether a Trump account has a place in your family's planning, and even if you don't have a child who qualifies, you may know someone who does, a niece, a nephew, even a family friend, reach out to us. We'd be happy to help you look at the options and determine what makes sense as part of your overall financial strategy. We'll see you again next time on Wealth Wednesday.